Okay, right. So this chapter will be on trading psychology, and it's a very, very important chapter that we'll be going through, right? So now, before I share my story, I want to let everyone who are new or even beginners or even advanced traders, right? A lot of people, before they get started, they already have the wrong mindset that Forex is a get rich quick scheme. Forex is easy to make money, right? So with this mindset, and if you actually start to lose money, what happens is you tend to give up very easily and you feel that Forex is a scam, right? But in fact, it is not. It's because you have the wrong mindset before you even get started. So how do you fix this? Before you even start to trade, you must have the mindset that in Forex trading, there will be losses and you will have to accept that you will lose in this game. There's no such thing as 100% win rate. So if you have the mindset that you will be able to definitely make money, that is a wrong mindset. And in the end, it will lead you down to what we call a gambler's mindset. So from here on, before we even get started, I want all of you guys who will be watching this video from now onwards to have this mindset that in Forex trading, you will lose and you will have to accept that you will lose. Okay. So I will share with you guys, this is a real story of myself, right? So when I was in my teens, okay, I was very curious like you guys, finding ways to make money, right? Entrepreneurship, how to do freelance stuff to make extra money, right? And I stumbled across all those YouTube ads, those TikTok ads, showing how Forex can make you a millionaire, showing their Lambo, dumping all the cashes, right? So I got sucked into this Forex trading world as a gullible teen. So I'm pretty sure many of you guys had the exact same thing, right? So, and this is also part of a reason why later on in my life I decided to provide free education. So you guys have to pay for courses and all of this, right? So my story, I'll just do this quickly so you guys won't get bored, right? So obviously I didn't come from a well-to-do family. So my parents are struggling to make ends meet when we're young, right? So life was tough. My mom was working multiple jobs and eventually she fell very ill. Right. So this triggered a mindset in me to start working since 14. So since 14, I've been working every single day after school so that I can provide for myself and my own allowances. Right. So I managed to save my first $10,000 by 19 years old, but I lost it all within the first year of trading. Right. So it was the exact opposite of what I have expected, right? So in YouTube, people is like, oh, $1,000 you can make $10,000. But when I first started trading, I lost my whole 5 years since 14 years old, my hard-earned savings, and I lost it all in just 1 year. So I felt like to, obviously, I felt depressed, devastated. I thought that Forex was a get rich quick scheme, but reality shows otherwise, right? So this makes me very down. I didn't know whether I can continue this anymore. So instead of taking a break to learn and trade properly, so a mistake that I made early on was that when I lose money, instead of taking a break to reread all my mistake and learn from my mistake, I decided to try to work even more and put in all of my monthly salary into Forex trading, right? And every time I just put in $200, try to flip back all my losses, 10,000, but it doesn't work obviously, right? Because you're trying to flip such a huge amount. So I just keep losing 200, 200, 200, 200. I busted 13 accounts within the next year, right? So I was working internship at that time and I was paid about $1,000 a month. I would put $800 every month into the account and trying to flip $10,000 and I just busted all 13 within the next year. So I lost all my income that year and I was surviving $2.50 a day on bread and my parents cooking, right? So I went into depression, right? I lost all motivation in life, like really lost all motivation. I wanted to quit trading. I cannot muster up the courage to tell my parents and friends that I lost my life savings, right? Because they are the ones that tell me not to get into trading because they say that it's a scam, and I was the one that always fight against them and say that no, I can really make money from it. But now that I lost it all, I don't know, I have no face to face them anymore. I couldn't tell them that I lost my life savings and things like that, right? But eventually my parents found out and they was against me of trading, against me to trade, and said it was a scam. And you know all the things that they say, like I told you it doesn't work out and things like that. But they give up. At first, I wanted to give up. But I always tell myself this: if there's people who can make it, so can you, right? So if there's so many people that are successful out there, actually made it through Forex trading, why can't you be the next one, right? So I didn't, right? I took a 1 year break. And when I say a 1 year break, not 1 year of not doing Forex, right? It's during this 1 year break, I didn't trade live accounts at all, right? I took on demo, I started studying the charts, reading books, right, about Forex. And during this period, I really write down, journal down religiously every single day on my demo account and creating my own trading plan and strategy, seeing which works, which does not. So 1 year straight, I didn't touch my real account at all. It's just constant studying. And fast forward, right? So what happens is, yes, now I might be consistently profitable, and I managed to somehow flip $1,000 account into a 40,000 account within 6 months of consistent trading and profit. But this is sheer luck. Why would I say this gives me a lot of greediness and contentment, okay? So this was when I felt that, oh, I was unbeatable, right? After 1 year of hard work, I finally did it. And okay, this is my time to maybe grow $1,000 to $1,000,000 and I'm going to finally be a millionaire, right? But little did I know, I was actually not addicted to trading. I was addicted to the dopamine from gambling. So I had this thing called the gambler's mindset, right? So imagine 1,000 to 40,000, and I was making about $300 to $500 every single day, you know. Every single day I was making few $100s. And I was so happy, right? Like I felt that I was at the top of the world. And I felt the need, right, when to trade every single day. Previously, I only want to take high setups, high probability setups. Maybe 3 days a week is enough. But nowadays I feel that I have to trade every single session, every single day, right? Because it has become a gambling addiction already at this point, right? So eventually on a bad day when I quarreled with my loved ones and I wasn't mentally strong on a day, I decided to force a trade because I waited the whole day and there was no trade, right? And so what happened was, without without the right mindset, I forced a trade up and no without a right trading psychology, and guess what? I lost $40,000 in one night. So that was also when during the COVID period when gold pumped very high, I was shorting it. I was layering two lots, three lots, four lots. In the end, I had like 20 lots and it keep continue pumping. Right. So because of that, my mindset wasn't really strong because I caught my loved ones and I wasn't mentally strong already. And also seeing my account in huge drawdown, right? And I lost everything. So 6 months of hard work and consistency gone within a night of mistake. So this is what happens when, even though people or one day you guys might become consistently profitable, doesn't mean that you guys will become consistently profitable for the next 10 years, right? From what I know, out of 100% of traders that started trading, maybe only 10% succeed in the first year and consistently profit in the first year. And only that 1% will make it 5 years. And only that 0.01% will be consistently profitable for the next 10 years. So when you come to this word called consistently profitable, right? It really depends on whether you can really stick to your discipline and trading plan for a long period of time, not just that 1-2 months. Yes, you can be consistently profitable for 1-2 months, but can you do it for 6 months? Can you do it for a year? Can you do it for 5 years, 10 years, right? So what happened was, yes, I did it consistently for 6 months, flipped my account 40x, and lost everything in one day. Not even one day, 1 hour, one night. Right? So this was when I learned that Forex is 70% trading psychology and only 30% technicals, right? So I started to focus a lot on my emotions and learning how to deal with losses. And this was the key to unlocking the secret to profitability. And many of you guys probably realize that, okay, sometimes you guys put a trade setup, but you guys close too early and somehow it hits profit. Or sometimes you close, or sometimes it's running to profit, but then you guys don't want to close early, return to your stop loss and things like that, right? So after learning how to manage my emotions, I learned to accept that in forex trading, you have to accept that you will lose. Okay. So what happened was, I'm pretty sure many of you guys who bust your account before had this exact thoughts, is because when you see that every day you're winning and suddenly one day you're in drawdown, definitely you'll continue layering and adding more positions until that you're out of the drawdown, then you will close the trade. But what happens when there's a full-on breakout and instead of going back to break even, you just had bigger and larger drawdown, right? And this is when your mindset is already over, it's done for already. Because once you're in a bigger drawdown, you add on more lots, and if it doesn't reverse and that is it, your whole account is gone. Then that is the thing. It's because we have the mindset that we cannot accept that we will lose, right? When we cannot take a defeat, we cannot take a loss, what we'll do is we will keep continuing layering and topping up to add on to your margin so that you can tank a reversal. But when there's no reversal and you will, at the end of the day, you'll lose your whole life savings. Okay, so it's very, very important to be contented with your profits and do not overtrade and accept that you will lose and learn from your losses and never ever revenge trading. Revenge trading is the one that kills you. So let's say really you have $1,000, you flip $10,000. Once you lose that $10,000, it's very normal in human nature to top up more money to make back the $10,000, right? In the end, you will lose the money that you top up, and then you will top up your even more money. At the end of the day, you will find yourself losing every single amount in your bank account. And this is a stage that I do not want any of you guys to go into, right? It's a very, very depressive state. Okay, so ever since I understand this logic, it became a whole new world, right? Which brought me to where I am today. So this is exactly why I created this chapter with the exact steps and tips that I started to taking to when I that helped me to become profitable. Okay, so the three most common emotions trader experience, right? So this is all I can tell you, my personal experience, but it's up to you guys to understand this whole thing. Okay, so the three most common experience that traders experience is fear. Number one is fear or anxiety. Number two is conviction and excitement. And number three is greed and overconfidence. So every one of you, be it any stage of your life, in forex trading, right, your beginner stage, your profitability stage, your losses stage, right, you will definitely see all of these three every single day, right? So fear and anxiety, a common cause of this is when you're trading too big. So every time when people ask me is how do I control this fear, this loss of confidence, why I always scared that it will reverse and hit my stop loss, right? It's because you are trading too big. Okay, trading with improper size magnifies your volatility unnecessarily, and you'll make mistakes you normally wouldn't make because you are under the stress of risking larger losses than normal. So let's say normally you are risking $50 loss a day, but this time on this trade you're risking maybe $500 loss. And that is why you'll become you'll be under huge stress, because if this hits your losses, you'll be losing an amount that you cannot afford to lose. And this is why fear and anxiety comes in, right? Number two, this is the scary one, right? Losses are not scary. You can always learn from losses. Conviction and excitement, this is the scary one, okay? So this is the key emotions people tend to feed off, right? You feel that every trade you enter, and conviction is the final piece of any good trade. When you finally hit the take profit, right? You have like, oh, I finally did it, okay? But the thing is, good trades can be losers just as bad trades can be winners, right? So the thing is, treat Forex as a game, right? So you can win in a bad trade as well, because if you lose this trade, every time you lost a trade, it's a learning experience. It's a win. As long as you take something off from it, it's a win. And every winning trade, right, doesn't mean that it's a good trade. You might win the trade, but it might be because of luck. And it could also serve as a good learning experience that, oh, I got lucky with this one, but I could have done better, right? So this is what you can learn from this. And now greed and overconfidence. This is the one that kills many profitable traders. So a lot of people, when you start to get 100% win rate, weekly win rate, and then suddenly you start to do very well, keep winning. And this is when you will have your greed and overconfidence, right? But if you aren't careful, okay, this is very important. You may slip and end up in a drawdown, and what happened is you will always top up and add on more layer because you're always winning. And you cannot suddenly you have a drawdown and then you are like, oh shit, this doesn't happen and I cannot stop. And I don't want to end my day in a drawdown. And what happens? You keep continue on and on and on until you lose your whole account. Right? So always check that you're using the right trading mechanics, right? Stick to your stops, your targets, and your risk management that you have always been doing, and only take your high probability trade setups, okay? So do not trade sloppily. So when I say sloppily, it's basically not sticking with your trading plan, right? This and overconfidence can end up in a very, very bad loss. So now, a lot of you guys probably hear me talk about trading psychology, right? So every time I talk about trading psychology, we talk about your frame of your mind and the emotions when trading. So like I said before, again, I want to reinforce that trading is 70% on trading psychology and your emotions. Okay, so this is the key to unlock your profitability. So we speak about discipline and being able to master your own mind. In order to become a good trader, right? You have to master your own mind, right? So emotions, most of you guys really know. And the thing is, the funny thing is all of you guys know that trading, you know, with your emotions and bad trading psychology is the one that cause you guys to lose money. You guys know it, but you guys still do it, right? Because of fear and greed. These are normal human emotions that humans just can't get rid of. It's normal, right? And this is the main two emotions that hinder a trader's progress. So a fear of losing a trade, causing you to exit a trade earlier than you should have, or maybe not even opening the trade in the first place, and then that trade actually turns out to be a very good trade, right? Or greed of wanting to make as much money as possible, causing you to keep a trade open longer than you should, or entering trades which you should not even have, right? And what is trading psychology? And this is a very important point, because you could develop the best trading strategy in the world, but if you do not have the right mindset to execute it in a disciplined way, you will never be successful. Okay, I'll repeat this again. So no matter how good your trading strategy is, no matter how good your technicals are, no matter how many times you do a demo, your setups pass, you have amazing profits. No matter how good you are doing, if you do not have the right mindset to execute it in a disciplined way, you will never be successful in the long run. Okay. So now maybe your trading plan works perfectly. Every time you full margin, you flip your account, right? In this entire month. But in the long run, do you think that the next year when the market changes, do you think you'll still be able to do it? Obviously, no, right? So identifying these psychological problems early, right, is very important, because you must be aware of what is your weakness. So for me, I'm a very impulsive trader in the past, which is what I identified earlier on. So I take steps to help with it. So you guys have to learn from what you guys are lacking, what are your flaws, what are your emotional flaws, and then you guys have to work towards it. Okay, so now it comes to the tips, right? How to train your emotions and trading psychology. So there's seven, which we will go into, right? So number one is to create a trading plan. Like I said before, this is a very important one, right? So a lot of people, they join because of signals, right? So signals group, yes, let me tell you one thing. Coming from a signal provider, I'll be very transparent with this, okay? Number one, you will never ever be profitable following signals in the long run. Why is that so? Sometimes I'm pretty sure most of you will realize that, oh, every time I see him, the person who give the signal always profit. But when I follow his signals, it doesn't profit, right? Hakim, I'm pretty sure you also feel that way sometimes, right?
Yeah.
Right. So why is that? So every time he show the screenshot, he's profiting. But every time I follow the trade, I'm not profiting. Very simple. Because he's using his trading plan. And the thing about signals is that he or the signal provider can send you a trade. By the time maybe he hits take profit, right? Before he send you guys that, oh, take profit has been hit. Then by the time you guys do it, maybe go buy food and your work, you guys check your phone. Oh, I didn't see the message to take profit, but now it reverse to hit my stop loss, right? And then, oh, what should I do now? Or sometimes you say, okay, I don't like the price action, let's cut trade early, or let's set stop loss to break even. But you are doing your things, right? So you just set your limits, you didn't remove your limits and things like that. And then what happens is, when you see your phone, it's too late, you guys hit stop loss and things like that. So following a signal is one thing, right? But if you can't have the exact same emotional tolerance as the signal provider, you cannot have the disposable income that he has, you don't have the exact same timing of entries, free time have, you will never be exactly profitable like him. Am I right to say that?
Yep.
Right. So you will never ever be exactly profitable, because you will not be able to take the exact same trade at the exact same point, because when he send you message, sometimes it has been delayed already. Right. So now comes to the question, how do you become profitable? Is to create your own trading plan that works best for you. Now comes to the second question. A lot of people always argue, what is the best trading plan? There's no best trading plan. The only best trading plan is a trading plan that works for you. A trading plan that works for me doesn't mean that it will work for you, because I have different emotional tolerance. I have different responsibilities that I have taken on. I have different disposable income. I have more free time and things like that. It varies from people to people, right? So for me, I can trade all day if I want to. I can look at charts all day if I want to. But can you, right? So all of this is very different. So the only way for you to become profitable into the long run is to find a trading plan that fits to you personally and works for you, right? And don't worry, in trading, there's no right or wrong. As long as you're profitable in the long run, people can be laughing at you, right? People can be laughing at your trading strategy. People can be laughing at your technical analysis, your plotting, everything. But if you're profitable in the long run, you don't have to care about what people say. There is no right or wrong. Even if you have a low win rate, but you have a high risk to reward, and you're still profitable, and that is perfect. It's okay to have a low win rate. Or if you have a low risk to reward ratio, but you have a very high win rate, it is not wrong as well. As long as you're profitable, they can laugh at you all they want, right? Now, this is also quite important, is to take regular breaks. Why is that so? Okay, if you trade every day, right, it becomes a need, right? Instead of, oh, I'm just trading. And then after that, when you trade every single day, it becomes a pattern in your mind. So if you don't trade a day, you will feel that, oh, I don't feel right because I didn't trade today. And then it becomes a sequence that you have to repeat every single day. And what does this become? It becomes a gambling addiction because you're addicted to the dopamine that trading gives you. The exact same thing as what all the gamblers feel, right? So it's very important to take breaks regularly because number one, trading is very mentally strenuous. It's a very emotionally and mentally taxing game, right? Trading. Every time you enter a trade, you're so stressed whether you're gonna hit losses or profit and things like that. So taking breaks regularly to relax your mind can help you to ease any emotional strain. So when you're already stressed every single day, do you think that you'll make the right decision in trading? Obviously, no, right? So always make sure that you are at a tip-top condition. If you are feeling stressful on a day, don't trade. If you have a bad day, do not trade. If you are quarreling with your loved ones, do not trade. If you do not, if you know that you will be busy, you cannot monitor the trade during that period of time, do not trade. It is as simple as that. Very simple, but everyone cannot follow it, right? Because they feel that there's a need to trade every single day. This is also very important. Most of the people that I talked to told me that, oh, they want to learn forex trading because they want to become a full-time trader, right? So being a full-time trader does not equate to having 5-digit earnings every single month. Let me tell you the hard truth about this, right? Yes, you can become a profitable and consistently profitable trader, but if you have liabilities and responsibilities, let's say you have to give allowances, you have to pay for your house, pay for your car, maybe you have to pay 5K a month, right? So maybe for the first 6 months, you have been consistently making 10K a month and you feel that, okay, maybe you can become a full-time trader because you're making consistently 10K a month. But the hard truth is, what if the market conditions change, your strategy don't work out? And the next 6 months, instead of making 10K a month, you lose 5K every single month. So how are you gonna pay for all of these different liabilities that you have right now? Right? So do not quit your job. Trading is a good way to make passive income. Unless you can consistently make 5, 6 figures a month, or you have a side business or passive income to sustain your liabilities or your monthly responsibilities, do not quit your job. Okay? Because trading is not guaranteed every single month you will win. You have losses and you have bad losses as well on bad days. So when you have all of these bad losses, if you quit your job, who is gonna pay for your bills, right? And it's not easy to find a job after you have quit it, okay? So always maintain your job until you have saved enough money or really have a proven strategy that you have. All right. Okay. And this is the most important. Same thing. Without a proper mindset, when you get started, there's no point trading at all. So now, most of you guys probably have been trading for quite a while, but I want you guys to adopt this mindset once again. Is to accept that you will lose. In trading, you have to accept that you will lose, and you will lose. Okay. What I mean by that is you cannot avoid losses and you have to accept the loss, right? If you don't have any loss, something is wrong, right? So if you want to become a successful trader, one thing that you need to know and accept straight away is that you're going to lose money on some trades, right? Sometimes even you can see 2 or 3 or even 4 trades in a row you can lose. I have that losses as well, right? I've lost 4 times in a row, 5 times in a row even before. My longest losing streak was 7 times in a row. But did I complain? No, I accepted it because I wasn't risking much, right? I was risking 1%, 2%. So it's okay, I can always make it back, right? So if your last trade was a loss, try not to obsess over it. Too many people is like, oh, my last trade was a loss. How I have to trade again so that I can make back the loss, right? So do not do that, right? So instead, take a step back. Every losing trade is an opportunity for you to learn and gain experience, right? So what went wrong from it? Learn from it, right? Journal down. See what mistakes you made, right? So this is a very important and a very tough part that people always lazy to do because people tend it's in human nature that people avoid to face their losses, right? So a lot of people don't want to journal their losses, don't want to find out what they did wrong because people always want to be proven right. But trust me, when you do this, it will help to elevate your trading game by a lot, a huge margin, right? So learn what will you do differently next time. Remember, right? Have a trading journal. The template has been sent by Leon that time already, so you guys can use it. Right? So every loss is an opportunity to learn and to get better. Concentrate on the next trade. Do not dwell on your losses, right? Learn from your losses, move on. Right? You never know. Your next 50 or 100 trades can be all win streaks, right? So you need to realize that trading is not about any single trade, but it's a collective amount of trade, all of them together, right? So you can lose your 5 trades, but if you only lose 5 trades out of 100 trades, it's still a solid 95% win rate. You can lose 20 trades, but if you lose 20 trades, but you win the other 80 trades, you are still on an 80% win rate, right? So do not just look at a singular trade by itself. Look at it as a collective whole of a month or a week or even a year, a collective whole, right? So your goal should be consistency over a number of trades, right? Instead of, oh, I want to make sure this trade flip to 200%, or depending to make your weekly profit in one trade, right? Instead, just do it slow and steady, consistency, right? And last but not least, very, very straightforward is practice, lah, right? It is all very well, right? Reading articles, trading psychology tips to help prepare yourself. But the reality is that the only way you're going to learn to master trading psychology is by actually trading. Okay, but you might not need to. Sometimes you guys might ask, right? But I trade demo, I have no feelings and things like that. Okay, maybe you guys can put in a small amount of money, $50, trade 0.0.1 lots, $100, trade 0.01 lots to have the trading psychology factor. But it's also important to practice trading so that you can experience first-hand emotions. But do not put more than 10% of your life savings in it. Let me tell you the straight truth, okay? 90% of people lose and bust their first account in forex trading, or even 99%, okay? So trading on a demo account will allow you to trade in real life market conditions without risking your own capital and providing the ideal place for a beginner trader to get the hang of financial market. So demo is your best friend. And now, okay, now trading psychology aside, okay? Practicing is the only way you'll become ever successful at anything, not just forex trading, okay? So keep practicing on a demo account until you feel confident, ready to trade, have a proven trading strategy and trading plan for yourself, and move forward on it. And also, when you transition into real trading in the live markets, remember to always trade with what you can afford to lose it all. Okay, lose it all. That's the keyword. What you can afford to lose it all. Like I said, let's say I have $10,000 in my savings, right? What I can afford to lose is maybe $500. And that is the max I will ever put in my trading account. I will never put more than $500 because if I lose it and I feel painful when I lose it, then that is not a comfortable amount you should be able to trade with. And of course, this is a no-brainer, right? Use a take profit and stop loss. Stop loss are there for, you can don't use a take profit, but you have to have a stop loss. Stop loss are there for a reason, right? It's to cut the trade. And both of these tools are very important, right? A stop loss allows you to minimize your losses. So in trading, there's only three things, right? A big win, a small win, a break even, and a small loss. You shouldn't have a big loss, right? So once, just remember that you have to always set your TP and SL. And last but not least, always backtest your trading strategy, right? Go on to TradingView, right? You can use the free backtesting tool, right, to backtest your trades. And just keep doing it again and again and again, right? You have to understand that all of these chartings are used is derived from previous data, and these are the only things you can use to analyze, right? Use your data, use it wisely. And for beginner traders, manually backtesting is probably more appropriate for you guys, right? So train your mind to recognize the chart patterns which you're trying to identify. So use all of these courses, not just backtesting on the charts itself. You have to backtest on the notes, on the educational content. Doesn't mean you read one time you will understand. You have to read 5 times, 10 times, even 100 times if you need. Reread it. Trust me, when I read price action, right, I have read over 100 times of the same book, 100 over times to get it into my mind. So just keep rereading and rereading until once you see the pattern, you can recognize it. Okay? So not just backtesting on the charts, backtesting on what you have learned before. And here are just some simple risk management strategies. Is number one, very straightforward. Okay, do not risk more than what you can afford to lose. Number two, limit your use of leverage. So it's okay to have 1 to 100, 1 to 200, 1 to 500, 1 to 1,000, 1 to 2,000. It doesn't matter. But what I mean by limiting your use of leverage is if you have a high leverage account, doesn't mean that you have to open a big lot, right? Stick to your normal lot size, right? A high leverage is just to help you to tank your margin. Okay, have realistic profit expectation. This is a very, very important part. Okay, I'll just summarize this quickly for you guys. So have realistic profit expectations and have a forex trading plan. And number five, prepare for the worst. Okay, this one, uh, you guys already know, do not risk more than what you can afford to lose. The FX market is highly unpredictable, right? So no matter how many confluence you guys have, there's still a chance of you guys losing the trade. Okay, anything could happen. You could have a country suddenly declare war, or you can suddenly have a market crash out of nowhere, and things like that. They can't predict another pandemic. So these are things that you will never be able to predict, and you might lose everything in a day. So do not risk more than what you can afford to lose. All right. So imagine having a trading account of $5,000 and you lose $1,000. The percentage loss is 20%. So a lot of people, what they do is when they trade, they see in dollar value, right? They don't look at percentage value. Same thing. When you trade $100 account, 10% is $10, but $10 to you is very little. Am I right to say that, right? $10 very little. But on a $100 account, it's 10%, you know. So if it's on $1 million account, 10% is $100,000 profit. So start to think in percentage value. Stop thinking in monetary value. If you trade on $1,000 account, 10% is $100. But if you trade on $100 account, 10% is $10. So it's actually very good already. On $100 account, you make $10. It's 10% of your account. It's very, very good already. So you guys don't have to look at other people and compare yourself with others. Like, oh, they are making 10% on $1,000 account, then they make $100. I have to make $100 on $100 account as well. That is not true. Start to look at things at a percentage value instead of a monetary. Okay, and always calculate the risk involved in forex trading before you even start. Learn what is the risk, what will happen, what are the possible losses. Okay, and at some point this is inevitable, right? You may suffer a bad loss or burn through a substantial portion of your trading capital. Most of the people will bust their account. Not once, not twice, maybe three, four, five times, even 10 times. Many people experience this, okay? And there's always that temptation after a big loss to try to fight and get your investment back with the next trade. And this is what we call revenge trading. But this increases your risk when your account balance is already low. And if you want to try to fight back and make back your losses plus your previous equity, this is the worst time to do so. So instead, consider reducing your trading size in a losing streak, right? Or taking a break until you can identify a high probability trade. Like I said before, you don't have to trade every single day, right? Always stay on an even queue, right? Both emotionally and in terms of your position size, right? You don't have to trade every single day. When you're not in the right mindset, take a break. Simple as that. So a tried and tested rule is do not risk more than 2% of your account balance per trade. But I know most of you guys tend to risk 5, 10, some of you guys even risk 100%. It's okay. As long as you're comfortable losing that amount of money, that is fine. But if you're uncomfortable losing that amount of money, it's time to reduce your risk management, your risk and your lot size, okay? And this one we have talked about this already, right? Limiting your use of leverage. Okay, this having realistic profit expectations. Okay, so one of the reasons new traders take unnecessary risks is because their expectations are not realistic. Very, very important. Okay, not realistic because all of you guys are sucked into forex trading from looking and viewing all these advertisements of people making millions of dollars, flexing their cars and things like that, right? So your mind has really processed all of this as what forex can get you, but these are not realistic because you don't even have the capital to flip to that amount of money, right? So they may think that aggressive trading might help them earn a return on their investment more quickly, but the best traders make steady returns. Trust me, the best traders make average 5 to 10% returns every single month. And if you make more than that every single month consistently, congrats, you're already doing better than everyone else out there, right? So set realistic goals, right? When I say realistic, right, it's like $1,000. Okay, maybe $1,000 you make $500 out of $1,000 in a month. That is realistic, okay? Making $50,000 from $1,000 in a month isn't realistic. Yes, I have done it before. People have done it before, but that is not realistic for people who are new, right? It has a certain factor of luck counted into it. Not everyone can do it, and not every time it will succeed. People only shows their win, right? I can flip 1K to 40K, right? My recent account, I flip 5K to 50K. But do you guys know how many times I failed to do it before I even succeed in that, right? I'm very open. I have failed so many times before I can even flip to that amount with a small account size, right? So people only show their wins, but do not be blinded by the wins, right? You have to understand that people don't show their losses. That is the thing with the forex industry. Okay. So yes, I've gone through with this. And okay, how to read margin. These are very important. People don't understand as well. So you guys see your MT4, MT5 accounts, we have margin, free margin, and margin level percentage. And the thing is, you guys don't understand what it even means. How you gonna trade, right? So margin basically represents the amount of money that you need in order to enter a trade, right? So this is your margin. It's the amount of money that you need in order to enter a trade. So your free margin tells you how much funds you have left to open new trades. So when your free margin goes to zero, right, that means you will not be able to open any more trades, which basically tells you that you have over leveraged this word. So when this goes to zero, you cannot open any more trade. That means you will have really full margin already. And now margin level percentage, okay, shows that the ratio between your account's equity and margin. So basically when this margin level goes to 1, it will have a margin closeout. So yeah, thought you guys have to be okay. Now, this is the most important one. Have a forex trading plan. Okay, one of the big mistakes new forex trader makes is signing into a trading platform and then making a trade based on nothing but instinct, right? So, oh, I feel that, okay, this is going to go up. I'm going to buy. This is going to go down. I'm going to sell, right? So, and then somehow you guys might be lucky. You guys might win a few news trade or whatever trade. But these are luck. You will not be able to have this exact same luck, exactly same wins for the next entire year. It's impossible. So as good traders, we should never depend on luck in order to profit, right? Very important. Okay, now, so a simple forex trading plan is like that, right? So to properly manage your forex risk, you need a trading plan that outlines at least the following. So these are the most simple trading plan. So when you open a trade, okay, so what do I mean by when you open a trade is the different types of confluence you will use, and make sure at least all of these confluence line up before you take a trade. So when you open a trade is, okay, let's say, for example, my trading plan have to include, I will only take a trade if I see that it's in my Fibonacci retracement in my golden zone, is at a significant support resistance zone, there's a fair value gap in the market and imbalance that has yet to be cleared, right? There's an order block zone or there's a liquidity sweep. So these are the confluence that I look at before I open a trade. Same thing. You have to identify when you will close a trade. Okay, when price action has an engulfing closure and is approaching my stop loss, but I want to cut the trade early because there's an engulfing candle, right? So this is things that you have to take note. Okay, now when I'll close the trade, okay, now prices we are in slight profits, but it seems that it's rejecting a key level right now. Maybe I'll close the trade in case the prices reverse, right? So these are the things that you have to write down into your trading plan. And there's no right or wrong. You can write down and then you can just filter what works for you, what does not work for you, right? So your minimum risk to reward ratio, this is a very important thing. So there's no right or wrong. You can have 0.5 or 1 to 0.5 also can. It can be 1 to 1, 1 to 2, 1 to 10 also can. As long as it works for you, that is fine. This is up to you to test it out, right? And last, number 4, the percentage of your account you're willing to risk per trade. Very, very important. So when I say this, you have to stick to this at all times. Okay, so let's say you're risking 5% of your account every single trade. You have to stick to 5%. So what do I mean by that? So you say that, okay, if I lose 5% of my account today, I'm gonna stop trading. You have to stop trading. Okay, you're not gonna revenge trade, nothing. Off your phone, log out of your account. That is it for the day. Come back tomorrow. Right? Stick to it. Okay, and only trade if you have absolute confidence. Why is that so? So if you take a trade when you're not even confident at, chances is that you'll most likely let emotions take over and let your losses run and cut your winner short. So this is the number one thing that keeps people from profiting, right? So what people is in human nature that they don't want to see red, they don't want to see drawdown, right? So they always let their losses run, hoping that it will reverse to profit, right? So that's why people tend to bust their accounts. And what happens is people also have the exact same contrary feeling or emotions is to cut their winner short. Why is that? Why is that so, right? So in human psychology, people always want to take their winning and go, right? They scared that prices will reverse into a drawdown. So people tend to cut their losses, let their losses run and cut their winners short because they want to just take profit and run. So the only way to be profitable is do the opposite. Very simple, but people can't do it because they cannot have a mastery over their psychology. So you have to cut your losses and let your winners run. The opposite of what you're doing right now. So cut your losses short and let your winners run. And only use signals or indicators as additional confluence. Very important. Do not follow it exactly. Use it as an additional confluence. If it differs from your analysis, then don't take it. If it adds on to your analysis, then that it gives you an extra confluence, right? That you guys have the same analysis, okay? So do not place a trade. Like let's say, okay, this guy say that it's a sell, but I think that it's a buy. But he's good, right? He has been profiting, has been having 100% win rate. So I think I should follow his signal. But the thing is, you yourself is not confident with this trade. You have opposite analysis as the person, but because he's good, then you copy his signal. This really gives you no confidence. So when it's approaching stop loss, what will you do? Obviously, you think that you cannot accept the loss, right? You let your losses run. And this will affect your trading psychology very badly. Okay, so once you have devised your forex trading plan, stick to it in all situations. Okay, very important. All situations, stick to it. Okay, a trading plan is called a trading plan because this is here to help to keep your emotions under control and prevent you from over trading. So if you don't stick to it, there's no point having a trading plan. And if you don't stick to your trading plan, there's no point carrying on trading anymore. you might as well just quit because you'll end up losing money again and again, right? So with a trading plan, your entry and exit strategies are clear and defined. You'll know when to take gains or cut your losses without becoming fearful or feeling greedy. So this trading plan itself is a very important plan for you to help you contain your emotions. It's impossible to get rid of all of these emotions, but this trading plan will help you to contain it, right? So this approach will bring discipline in your trading and is essential for good risk management. Okay, so it stands to reason that success or failure of any trading system will be determined by its performance in the long term. Right? Very important. I like this quote a lot. So anything in the short term doesn't matter. As long as in the long term it works, that is okay. You can lose this trading strategy every single day, but in the long term, if it's profitable, then it's okay, right? So don't be too hard on yourself if you guys start to lose a lot and things like that. It's okay. Do not break, do not bend, right? The rules of your system is to try and make your current trade work. By if let's say this confluence doesn't look for you, then change the confluence, right? Let's say you feel that liquidity sweep doesn't suit your trading plan. Okay, you can switch to order blocks, SMC. SMC doesn't work, use price action. All of this doesn't work, try combining it all, right? Like me, right? When I trade SMC, pure SMC, I feel that it doesn't work. Then I trade pure price action, it doesn't work. I trade pure ICT, it doesn't work. But what worked for me is to combine all of these three. And then, oh, it sparked that thought in me, right? Finally, it worked, right? So try and error, just keep trying. Trading is an everlasting, consistent learning journey, right? And this, always prepare for the worst, okay? So no one can ever predict the forex market. But we have a lot of data and evidence from the past of how market can react in certain situations. Like war. You can see in the past, right, for gold, right? Every time when there's a war, gold flies, right? Every time there's a pandemic, gold flies because it's a safe haven for investment, right? Every time when there's an interest rate cut, what happened, right? Every time when there's an interest rate hike, what happens? So all of these are data that you can see and analyze. Okay, so look at the history of your currency pair where you're trading. So sometimes you think that, oh, there's no more resistance this within this tree already. I don't know where to look at the next resistance zone like GBP JP right now, right? Go back 10 years, you will see that, oh, GBP JPY actually was at 250 before, but now it's only at 188, right? So always go back 5 to 10 years ago if you need to. And do not underestimate the chances of unexpected price movement. Anytime can happen, unexpected price movement. Okay, you should have a plan for such a scenario, right? Because they do happen. So maybe you have 10 confluence lining up, right? But it still can hit your stop loss. Why is that so? Unexpected, right? Movements. So always enforce that your account should always be what you can be willing to lose it all. And that is it. And next chapter we'll be going through price data. All right. All right. So Hakim, back to
Yes.